What we're going to do is, this is a panel on how the independent sponsor model has evolved. Something that's very close to my heart because I've been doing this for about 20 years. So what we're going to do is we're going to go through a series of questions. It's much more interesting for us up here, and it's much more interesting for you, the audience. If you have a question while we're running the panel, please raise your hand and ask your questions, and we'll save some time at the end as well. But I always find it much more interesting if it's interactive from almost the get-go. We're going to start with introductions. I've asked the panel to keep the introduction short, and then we'll get into the meat of it. I will start. I'm Doug Song, Protos Capital. I've been an independent sponsor since 2003. So I guess I'm one of the dinosaurs in the room. I know there are a few others like me in this room. We do lower middle market buyouts like everyone else. We have 5 portfolio companies, soon to be 6. And I will turn over the mic.
Hi, I'm Anna Winters. I'm with Midwest Mezzanine Funds. We are based in Chicago, and we provide subordinated debt, equity, and unitranche structures to support independent sponsors acquire companies at the lower end of the middle market. We're generalists who do a variety of different industries, and we've been supporting independent sponsors since 1992. We are currently investing out of our 6th fund, which is a $250 million SBIC fund. And I've had the pleasure of working with a number of you already in the room and look forward to meeting more and getting more deals done.
Good morning, I'm Bob Shuttle. I'm a managing director with Star Mountain Capital. Star Mountain is a lower middle market focused flexible capital provider. We provide debt and equity solutions to independent sponsors, direct to companies. We like to think we're a value-added capital provider. We can bring human resources, operating partners, board members, et cetera, to the table. I'm glad to meet you all and hopefully get to meet more of you as the day progresses.
Morning. My name is Dave Heemstra. I'm the founder of Quadec Private Capital. We're a middle market independent sponsor based in just outside of Detroit, Michigan. Prior to forming Quadec about a year and a half ago, I spent 15 years in private equity at 2 other firms, one of which started as a committed capital firm and morphed into an independent sponsor. And so I was involved in my first independent sponsor deal in 2011.
Good morning. My name is Gopal Tampi. I started my career as an investment banker. I ran middle market sponsor coverage at Nomura, before that at Morgan Stanley, and before that at UBS. About a year and a half ago, I co-founded Deal Matrix, which is a data provider. It helps provide data on capital sources, both debt and equity, to the sponsor community, both private equity and independent sponsors. It also provides a series of software like data rooms and term sheets and CRMs to this community.
Hello, my name is Matt Harnett with Teacom Capital Partners. I'm a partner and co-founder there. Did my first independent sponsor deal in 2007. We're on our 4th debt and equity fund, currently investing out of a $300 million SBIC fund. We also co-sponsor on the equity side for larger independent sponsor deals. So we can try to provide all the different sources of capital independent sponsor might need. We've done over 100 transactions. I believe 80% of them have had an independent sponsor involved. So it's definitely core to our practice and what we do. So thanks for being here today. Really look forward to having an informative discussion. And partner Jack Sturm is here as well.
Thank you all. So we're going to kick it off. And we tried to sequence these questions. Hopefully they make sense to you guys. But again, please do raise your hand if you have any questions while we're up here. The first question is, how has the independent sponsor model evolved over the last 10 to 20 years? David, you want to take the lead on that?
Yeah, I think there's a couple obvious ones. One is just the proliferation in number. I think McGuire Woods estimates there's something like 2,000 independent sponsors in the US, which is just an insane number. And it's great to see. I think the other thing that's important is the respect that's been afforded to independent sponsors today versus 10 to 20 years ago. Doug, I'm sure when you started and you tried to get in processes, investment bankers and brokers were maybe not as welcoming to the independent
I had to wear a wig.
Yeah. And you know, it used to be the case that independent sponsors maybe felt like they had to shy away from defining themselves as independent sponsors. Maybe, well, frankly, they weren't even called independent sponsors. They're called fundless sponsors, which had a bit of a derogatory connotation. So I think there's a level of respect afforded to independent sponsors and more pride amongst independent sponsors. I'm happy to call myself an independent sponsor. I think it's frankly a better model than traditional private equity. A really nice ecosystem of capital providers has sprung up around independent sponsors. I mean, have an event like this where you've got dozens of capital providers that are here proactively marketing themselves and want to see deal flow for independent sponsors. That wasn't the case before. It was hard to get the attention of a senior lender, a subordinated lender. I think there's more room to go on the equity side in terms of supporting the independent sponsor model, but that's maturing as well. Standardization of economics, right? There's now a pretty established market around closing fees, monitoring fees, promote. There's always negotiation around it. It seems there's more tiers in the promote, but there's a pretty established market that's the starting point for negotiations. The prior panel I thought was interesting, talking about going from the independent sponsor model to maybe funds. From my perspective, I feel like it used to be the case that independent sponsors, the assumption was you're doing it as a stepping stone to raise a fund someday, or it's a bridge from one fund to the next fund. For me and most independent sponsors I know, the independent sponsor model is the end game, right? It's an attractive model and it's a sustainable perpetual model. So I think that's good to see. Last thing I note in terms of the evolution is just the range of strategies. The independent sponsor model is inherently flexible, right? You're often a limited number of people. You determine your strategy. You're not tied. You're not making promises to limited partners for a 10-year fund life. So we're seeing things develop like, for example, we like the idea of longer term holds. We have a couple portfolio companies that we'd like to own for 15, 20, 30 years. Not possible under the traditional private equity model. You're seeing holding company strategies develop, things like that. So the evolution has been great, and I think it's going to continue.
Anybody else?
Yeah, I think the model has come full circle. You know, in the 90s, you had people, there were more independent sponsors, or to your point, Dave, fundless sponsors than there were funded sponsors, or they were pledge funds. And today you find some of those folks that were independent or pledge funds are managing massive pools of capital. But if you can't raise, if you're not looking to raise a $300 million or $400 million fund, it's very difficult to raise. You heard the prior panel, it's very difficult to raise that capital because the institutional investors only want to write a certain size check, yet they can't be more than a certain percentage of a fund. So you find those people who don't want to raise $300, $400 million funds, they like $200 million or $100 million funds. They have a choice of going independent, and that's what they're doing. And I think that's also why you see more popularity and more people looking at independent sponsors, because those folks were funded. They've developed the relationships with capital providers. They have good track records, and they're just more attractive. You know, the capital solutions find that to be more attractive to go work with the folks that they've worked with for 20 or 30 years.
I'd add, just on the flip side of that, Bob, is that it's not just the lower middle market or the middle market that attracts independent sponsors. Like it might have been 20 years ago when it's fundless sponsors. I have seen independent sponsors attack billion-dollar deals.
Can everybody hear him?
Yeah. Is my mic on? No? Yeah, okay. I've seen people come out of some of the largest private equity firms in the world, become independent sponsors and chase after billion-dollar deals with their track record of closing those deals, operating those companies, raising the capital. They're able to compete against massive private equity firms and other buyers, and the broker community, the banker community respects them. So to your point, that stigma of being an independent sponsor just does not exist anymore.
Just a quick show of hands. How many independent sponsors in the room? Well, quite a few. And how many capital providers? Great, thank you.
Doug, let me add on it. For the independent sponsor in your room, if you could raise your hands again. Now leave your hand up if you intend to raise a fund. Okay.
So there's
Yeah,
a good number.
a couple.
He's shaking his head, I'm not sure.
Unsure, on the fence,
That debate is never going to go away.
maybe a hybrid.
Why don't we go on to the next topic unless there are any questions? Yeah, please.
What was the takeaway? Because I didn't see how many hands went up. So I think there was about 15 to 20 independent sponsors in the room. I saw 3 hands stay up.
Second question. What are the different types of independent sponsors, and what are keys to being successful independent sponsors, with more coming into the market seems to be every day? Bob, perhaps you want to take this first?
Sure, sorry. The number or different types of independent sponsors, I just think it's infinite. It could be whatever you want it to be. But I think for the most part, you have one person in a shingle. You have folks rolling out of funded, typical traditional sponsor relationships and sponsor structures. You have folks that are focused on very narrow set of types of companies, whether it be industry focused or lower middle market focused or whatever it might be. I think you're starting to see even folks raise debt capital as independent sponsors. So it's kind of whatever you'd like it to be. And I think the options are unlimited.
Anyone else?
And we don't necessarily look at an independent sponsor, whether we'll back them or not, based on their makeup, like you don't necessarily need to have a big team or a big infrastructure. I mean, we've backed individuals and we really look at the track record. What have you been doing previously up until this point, whether it's on an independent sponsor model or if you were with a committed fund previously. I mean, that's kind of our important criteria that we really look at, whether we want to back an independent sponsor or not.
I think for the second part of the question, as far as what makes an independent sponsor more successful potentially than others, from my own perspective, if you have a go-to set of capital providers, doesn't have to be the same all the time, but if you have people that have somewhat consistently backed you, I think that's a recipe for success.
Yeah, I'll add consistent operating, folks and partners. If you have a CEO or a group of managers you've worked with in a particular industry and you bring that to a capital provider, that's highly attractive because you say, I've worked with these guys, here's what they did. And it really helps remove a lot of the risk out of the deal when you're bringing a team you've worked with before.
I have a friend of mine who's an independent sponsor, and I'll steal something I've heard him say before, which is that there's really no barriers to entry or very low barriers to entry to be an independent sponsor, which is, I think, part of why you're seeing such a proliferation of it. But there are barriers to success. And experience is one of them. Capital provider relationships is another. And then luck is part of it too.
Any questions? Please.
Can you distinguish?
Well, yeah, it's all part of it. Obviously, if the deal is very attractive, then, maybe the bar is a little bit lower. But if the deal is maybe one of those that isn't necessarily down the fairway, and might, run into some issues down the road, then you definitely look at the track record and you want to see, has this person executed a deal in this industry before? Has this person executed a deal that maybe didn't go necessarily according to plan? And how did they resolve that? So we kind of look at that a little bit more. But yes, if you've got a great deal that's down the fairway, great industry, high growth, then of course track record is still important, but maybe we don't drill down too deeply to it.
From my experience, a capital provider will figure it out. In other words, if they know the independent sponsor is less experienced, but it's a great deal, they stumbled upon it somehow, they will find a way to do it, maybe become a little bit more active, have more governance over the transaction and post-closing, right? But they'll figure it out. Any other questions? This gentleman in the front is occupying all the questions. I want you guys to know that. Always the front. Third question is, one of the trends that I've seen and experienced is more independent sponsors partnering with other independent sponsors. What is driving this? Do you see it continuing? And I could just say, personally, I've been involved in half a dozen such transactions over my period. So Matt, do you want to take that?
Yeah, sure. I mean, I think as this whole industry has evolved over the last couple of decades, you got people like Doug who have been doing it a long time. He's maybe had a couple of successful deals. So he sits back and says, well, how do I scale my business? There's lots of new people coming in that are independent sponsors. One of the ways he can scale his business is, scaling his business through other independent sponsors, partnering up and co-sponsoring in deals. So from an established, if you put them in two buckets, established independent sponsor and emerging, the established guy says, well, geez, I can scale my business through partnering with other individuals. And it's another way for him or limited capacity. You don't have a staff of 20 people as an independent sponsor, but you can find good emerging independent sponsors that have an angle on a deal. Another thing is that sometimes somebody has a relationship, maybe somebody who isn't established found a deal and has the tiger by the tail and says, well, how do I get this done? I don't have that experience. Who's gonna give me the capital? Well, go partner with a really experienced independent sponsor. Say, you have the track record, I have the deal, I have the relationship, or I have the operating partner. Put it together, just get the deal done. Don't worry about maximizing your return day one. Just think about, I want to get a deal done so I can notch a win. It's not about getting maximum points at the first game. It's about a war. It's multiple battles and building your track record. From the emerging person who's like, man, I really don't want to give up these economics. Why am I giving half of my carried interest? Listen, if you go with an established person, they're going to tell you what capital providers are looking for. What kind of flip deck do they want? Do you need a quality of earnings? Oh, by the way, talk to this guy that they do all my quality of earnings. You're going to get their playbook. So it's a win-win. And also they have a balance sheet. I mean, an established independent sponsor probably has had a few exits. Was probably a multimillionaire. And at this point, and they have a balance sheet and they have capital providers.
Deca millionaire, not multi, Deca,
Yeah.
Deca, think Deca.
Yeah, DECA. And those are the ones you obviously want to partner with this guy down here, I think. So, but there's just a ton of value add on both sides. So we love it, because it shows humility too from an emerging person's perspective. They're like, hey, look, I don't have all the answers. I want to partner up with somebody. But man, you're going to lose half your carried interest, but you're going to gain so much. You're going to learn the playbook. And from the guy that's like, why would I give my playbook up, who's more established? I mean, part of this is building a community. I mean, right? I mean, it's kind of the right thing to do. It's not like we're, doing triage, saving lives here. But if you can help the next person coming up and change their lives, I mean, that's something, right? And through that, you're going to gain additional deal flow. If you help somebody do their first deal as an established independent sponsor, you just build a great friend and a great resource for additional deal flow. And this business, it's a small community. It's all about relationships and your reputation, and that's going to carry you forward. So that's, I kind of think a huge trend that we've seen. In fact, I got 2 deals just this week, and on the top were 2 different logos. And I think that's a huge trend.
Yeah, I would do a deal with any other independent sponsor with the exception of Chris right there, perhaps. But he's so right. And for us, and this is a passion of mine, I love working with other independent sponsors, especially emerging managers. I'm going to do a panel at the McGuire Woods conference. Sorry, Anna. I'm not plugging them, I promise you. But it's going to be on independent sponsors partnering with other independent sponsors, because I am passionate about this. And to help emerging managers along the way. Also, if another sponsor, except for Chris, comes to me and says, listen, this is too big for me to do by myself. Perhaps it's a 20 million EBITDA business, right? I need some help to pull this together. I think that's another situation which makes a lot of sense, because the deal is chunky enough that the economics can be split and it makes sense for all parties.
Yeah, it's frankly more enjoyable too. I mean, this business is a roller coaster ride. So to have people to celebrate the highs with and commiserate the lows with, smart people to bounce ideas off of, brainstorm when things get challenging, it's just a more enjoyable way to go about it. And I think the last thing is it helps you diversify, right? I think the capacity for a single independent sponsor is probably 3 to 4 deals max. If you want to diversify your net worth and your income streams to get involved in 5 or 6 deals, you probably need a partner and take a little bit of a less hands-on role in multiple deals. That can be attractive as well.
Yeah, no, we definitely see value if somebody like Doug is partnering with an emerging partner, and then we place a lot of credence on Doug's, viewpoint in those transactions. The one thing that I'll say though is that you got to just iron out the corporate governance then, because ultimately we're going to want to know who's ultimately in charge. And if it's everybody on equal footing, that's fine. But is somebody, a little bit more weightier in the situation than others? So those are just the dynamics that you kind of need to work out, because we've seen situations where unfortunately it didn't go well. And one of the new emerging manager, he left. So luckily we had the more experienced one that we kind of were able to work through the situation and work it through. So that's just something that you'll need to iron out. And Chris, give me a call. I'll do a deal with you.
Any questions? Except for Chris. The next question then. What are the key deal dynamics in an independent sponsor partnering with another independent sponsor? How will the capital community view this partnership trend? Gopal, do you want to take that one?
Yeah, sure. This is, sorry. This question is just like a segue from the prior question. So a lot of what the answers you heard already answered this question, but I'll approach it from the point of view of someone representing a lot of sell sides that involved lower middle market and independent sponsors. So the history of this, as you started saying at the beginning, was that 10, 15 years ago, we were running lower middle market sell side processes, and we really wouldn't entertain independent sponsors for two reasons, right? The most important being certainty of close. Right? As a sell side broker, what you need to convince the company owner is that, look, I can close this deal. And without a fund, it was hard to be able to make that argument. And that's evolved dramatically, where there's an example of one company that I worked with where I sold it for 7 million EBITDA. There were independent sponsors that approached me and we said no. That same company came back 5 years later at 9 million EBITDA, it barely moved. And at that point, we did include independent sponsors, 2012 to 2018, dramatic move in the industry. And I think that what had changed there was the independent sponsor community, or those individuals that approached us, talking more like organizations and institutions, showing us a track record, showing us where their capital was coming from, demonstrating that they had a successful track record with closing deals, and that track record was important to them and their reputation was important to them. So that made a difference. Now, as an emerging independent sponsor, you may not have such a track record unless you may be coming out of a larger fund, and in which case a partnership would make a hell of a lot of difference to the broker or to the person selling the company, either to the owner of the company himself or herself, or to the broker community. And so from that point of view, it would be important, if you have a deal that you like and you're an emerging sponsor without a track record, I think it would be really incumbent upon you to find a partner that has a track record to demonstrate that you can actually have the capability and the capacity to close the deal. And the second thing that I think Anna may have touched on is post-close, the ability to actually manage the company. Right. So if you don't have experience in that particular sector or those kind of companies, and you want to convince your capital provider that you can manage it, then you may want a partner who has experience in that industry, experience in that kind of turnaround, that kind of company, what have you. So what you are trying to do is build a marriage for between 3 to 10 years, whatever the number of years is, of someone who has complementary skills to you, where you can help each other out. Like, you have the deal, someone else has the capital, someone else has the expertise, someone else has the track record, someone else has maybe has nothing to do with private equity, but has run a company like this and wants to be part of the independent sponsor community. I think the previous panel had someone talked about a set of people who wanted to go into the sponsor community or raise a fund, but all they did was run companies. They didn't have a track record of closing deals. And many of you guys have track records of closing deals. So partnering with people like that to go after companies that they know, I think those are excellent ideas.
I also think that two independent sponsors coming together, the cultural mesh needs to work. You really need to focus on that, because you can have the best deal, the best management team, but if you are not culturally meshed and on the same page, that is an ingredient for failure. That makes life a lot more difficult. It's the same as when anyone's putting together a firm. You bring in a team together, the culture really needs to work. So you can't really lose sight of that.
The why is very important. If you're being asked to partner in an independent sponsor transaction, why is that person asking you, or why are you asking that person? What skills do you bring, or are they just looking for you to bring your capital sources to the deal, right? And if that's the case, that may be okay, but the why for the partnership then leads to how the roles and responsibilities break down, and then that probably leads to how the economics are split.
Any questions, thoughts?
Yeah, when you distinguish with me between managing investments, like right? I'm not sure if you were, at least it wasn't clear to me, or which of those two, where the potential.
Sure. Any other questions? No, I was conflating the two, right? And I think that in my experience, looking at sponsor transactions, both funded and and independent sponsors, you have to, oftentimes you have to step into the management role and you have to guide the company as if it was your day job, right? As if it was your day job, as if you were sitting right next to the CEO, as if you're sitting, like you are sitting on the board, right? But it's an executive position, not a non-executive position. You're actually defining the strategy of the company. You're helping grow it along. You're giving expertise. Now, exactly. And that's what I think that capital providers are looking to you for, right? If you are lucky enough to get a company, a good company with a great management team that knows what they're doing and has a strategy in place, you've probably overpaid for that company. That's my guess. But more often than not, you as a sponsor are going to need to implement a strategy for the company for the next phase of its growth. You're going to have to force the management team to do something that's different from what they were doing in order to get that growth. That's the reason why you bought the company. And so if you don't have the expertise in doing that for similar companies or for similar industries or what have you, then partner with someone who does, because it could really help you.
Yeah, when you're putting together that board, you're trying to put together a strategic advisory panel. And I kind of like, if you're an independent sponsor, you're not working in the business, you're working on it. So what do you want that company to look like in 5 years? What are the pieces? It's like a chess game. What does this need to look like to take it from a 6X to a 10X? Well, we got to grow recurring revenue. We have to diversify our customer base. What are the things why didn't you pay like 8 or 9 times? Well, you paid 5 to 6 because there were some glaring issues. Fix those issues, put in some good technology, upgrade it. So work on the business and think about what are you trying to build? What are you trying to sell in 5 years? If there's holes in that management team, you can't fix it all. You really shouldn't. You should go find those managers that can do it. And that's really the only way you scale. If you're in there running the details of one company, well, forget it. You're not going to be able to scale and do 3 or 4 businesses. At least that's the way we look at it. And in fact, I try to encourage my independent sponsors, don't get so in the weeds. Push yourself up and like high level and look down and say, how am I going to build this out from a strategic perspective? At least there's different ways to do it. There's some true operators that go in. I kind of like more like the high level, put the pieces in place. But I mean, there's more than one way to do it.
Yeah, no, I'd agree. I mean, there's the player coach mentality, or there's just the coach. And I think I lean more towards the coach, because when you're the player coach, sometimes you're too close to things. And sometimes you can't necessarily see, the writing on the wall because you're just too much into the weeds. But, being the coach and you're really just advising your team kind of what direction you want to take them. And then also making sure that your team is on board. So there's often a disconnect because a lot of these businesses that you're acquiring, are owner entrepreneur, businesses that, have been very successful getting a business, from point A to point B. And so sometimes they look at, the whole private equity model and sponsor models like, well, what do you guys know about running businesses? And so it's very important to get them on, the same page and make them understand, what are we doing? We're trying to make the business scalable so it can support the growth. You just can't go out and start growing. You got to build the infrastructure and you got to make the business scalable so it can support the growth, because otherwise you're going to have a house of cards and it's just going to fall apart. And often a lot of these entrepreneurs, they don't want to do that because that's not how they've been doing stuff. And so what's important is to know if you need to make changes in your team. A lot of times, sponsors, they feel like, oh, we cannot make changes in the team. We cannot. It's like, no, sometimes you can, and sometimes you need to. And sometimes, when you think you need to make a change, it's usually too late. So just kind of always having that approach of working well with your team and being more of a coach, I think is a little bit more successful.
Ted Lasso. Question over there. I can start, guys, on that. I would say that the vast majority of the time, we have an operating partner in the deal. And the best scenario for us is when a former executive or operating partner that we know finds the deal, because then they automatically are part of the deal. And then they're part of the solution post-close, speaking about value added. So that's our favorite type of setup. If we don't have that, we may bring in an industry executive to the board as an adjunct. So that's typically how we handle that. But we never go into this just as deal guys. It doesn't work as well.
Yeah, and I would add that you should look to your capital providers for that. So you should look to your capital providers and say, who do you have? Like, I have a healthcare deal. Do you have any operating partners you could bring to the table? Do you have any ex-CEOs? We just did a deal and actually chose our capital providers because it was a 3 SBIC syndicate based on the experience of those individuals. So it was a healthcare deal. And one of the partners at the SBIC fund worked for Abbott Labs launching products for 7 years. Another guy, 90% of his deals are healthcare with similar end markets. So then when we were bidding on the deal with the independent sponsor, I said, hey, look, here's our syndicate. This is your board. And it really positioned us very well because they had some other capital providers, but this business owner was rolling over. He wanted help how to grow the business. And look, you got 3 or 4 really smart people that know some things about your industry. We're going to be advising you. And that really helps that CEO. And that really helps a capital provider. It's a kind of a win-win, putting all the pieces together. So I think as an independent sponsor, you should be like, hey, what do you guys got? Who can you bring me? So I think it's just a natural segue to challenge your capital partners to bring you value-added operating partners.
Like everything in the independent sponsor model, though, it's a deal by deal situation is what I've seen. I haven't seen there because you don't have a fund with a management fee for the budget to have an operating partner at the sponsor level. I haven't seen it there. I've seen it, bring it on a deal by deal basis, and the economics for that individual are paid for by the deal.
Echoing on what Matt said, at Star Mountain, we pride ourselves in trying to build out our operating network so that we can bring that value to the table to the independent sponsor world. And then going back to the second question, what types of independent sponsors are there out there? I kind of find that the folks that have a narrow industry focus tend to have not necessarily a stable of operating partners on staff, but they do have that network ready to go and bring in to a food deal or a technology deal or a digital marketing deal. I mean, if they're focused on that industry, if they're going to be successful, they need to have that network.
Okay, please. Because as soon as that capital provider does that, their reputation goes down the tube.
Exactly.
They can't afford to do that.
That wouldn't happen. I mean, not in this small community. You just can't do that.
I'm sorry to hear that. I
Yeah,
mean,
that's too
we are
bad.
not set up to actually run companies. I mean, we don't have the bandwidth. We don't have the expertise. I mean, we are looking for the independent sponsor to really do the heavy lifting and run the business and be in constant communication and contact with the company. I mean, we don't have that expertise or ability to do that.
It's not what our investors are asking us to do.
And the capital provider actually does want to provide that value. They don't want to be seen as just money. They really do want to add that value.
Yeah, and it's usually supplementing something you have. If you have an operating partner and you have the deal, if we can bring somebody to the table that adds to that, or maybe it's somebody that served on 3 boards similar to that in their life of being, a capital provider. Or, oh, by the way, I have a CEO over here. We just put a guy on board who he runs a $100 million snack food company, and we did a cheese company. And we said, hey, would you want to come sit on the board instead of me? I mean, he can advise them on food safety, on growing new channels, private labeling, way better than I can. So he came, invested $500,000, and the CEO loved it. And he bounces things. They talk weekly. So that's what we mean. A lot of times, same thing. We have 2 logistics deals. Both of those CEOs sending each other boards. They've become great friends. And those are the types of, value adds I think a capital provider wants to bring.
Any other questions before we move on? So the last question before we're going to open it up to the floor, and I'm very, very happy that this has been interactive, so we appreciate that. What do you see as the future of the independent sponsor model over the next 5 to 10 years? Anna?
Well, as we've discussed, the independent sponsor model has been gaining significant traction. Our group was founded back in 1992, and our founder, Dave Gazan, said that he was doing, independent sponsor deals way back then. They were called, pledge funds, fundless sponsors, what have you. But it was more on a one-off kind of basis, and it usually was somebody that we knew or somehow was connected to. But now, the model has evolved such that we are, reaching out and seeking new independent sponsor relationships, every day. And the majority of our portfolio is actually centered on independent sponsor backed deals. So it's really gained significant traction. And as independent sponsors continue to get more and more deals done, they will continue to become an attractive buyer universe to sellers and investment banks, and no longer necessarily be discounted, in those auction processes. And I see the future moving forward, independent sponsors, I think historically we had talked about, viewed it as a stepping stone. Really this is just an intermediate place where they were going to get some deals done and then eventually seek the permanent capital route and raise a fund. And there's still some individuals who are pursuing that strategy. I think we saw 3 of them here today. But as we did note in our survey earlier, that the majority are planning on sticking with the independent sponsor route. And so that's kind of been a change and really just speaks to how established and developed this model has really become. And there's really no right or wrong answer whether you raise a fund or you remain independent. It really just matters what's best for you and for your investor base.
I also, excuse me, I also think we heard in the prior panel how difficult it is for people to raise money today. Once you raise the money, it's incredibly difficult to manage it from a investor relations, investor reporting. There's all kinds of standards. There's ILPA, there's, you name it. There's all new types of reporting requirements that large institutional investors continue to require. I think some folks just don't want to deal with that. They're deal people. They want to go out and do deals, and they want to manage those investments. They don't want to deal with all the other headaches and the incredible amount of staff, whether it be compliance or investor relations. They just don't want to deal with that. And so I think that
ESG. You don't want to deal with that.
I mean, you just don't want to.
Neither do we.
Sorry.
Anyways,
Those LPs.
enough said.
I'll just add to that, which is from, again, putting on my investment banker hat. I think that I've seen an evolution in how a banker running a low middle market sell side process views independent sponsors over the last decade. I think if you look in the future, I actually think it's going to become part of the sell side strategy, where when they have certain types of assets to sell and they want to broaden their base of potential buyers, they will have a strategy to go out to independent sponsors that might have been doing something separately, invite them into the deal. So that rather than independent sponsors having to find the deal, they might be invited into processes more and more by banks. I know one broker who has a person on their sell side team that is dedicated towards independent sponsors, and they're looking to make that an integral part of their sell side process. And they're pitching the owners of companies that they're differentiated because they're able to bring in independent sponsors into the deal and thereby expand the number of people who are participating in an auction.
Tell me who that broker is after the panel. Don't tell everyone else.
Yeah, the model is going to continue to grow and evolve. It's kind of an unstoppable trend. And what I think will help that is the independent sponsors in the community, in this room, continuing to behave well. Like, don't sign up deals that you're not confident you can close, or you can't get over the finish line because you can't raise the capital. If a deal you're in hits a bump in the road, roll up your sleeves and get involved. Don't cut and run. The more the independent sponsors behave with that level of responsibility, the better it is for the community as a whole, and the more it's going to continue to grow.
Yeah, and lastly, I would say that there's still a lot of holes in the whole community. It's still new. And there's still a lot of services that I think independent sponsors don't have and aren't served perfectly well. I think somebody brought up a great point over here about having, operating partners. Maybe a business will pop up that provides, that service to independent sponsors. Accounting, people don't have deep pockets. Maybe accounting firm will pop up that says, hey, look, we'll do quality of earnings. And if the deal breaks up, we'll eat it, but we want to see your next one. I don't know. There's a lot of things that are blocking independent sponsors from being truly successful. And I think it's going to evolve and emerge. There's going to be new businesses that sprout up. There's going to be technology. There's going to be lots of new things. I think it'll make it more of a sustainable model long-term. So I don't know what those things are, but I look forward to seeing them.
Yes, Sylvie sitting in the back said she would do that. So look,
I mean,
talk to her after.
Not to do a plug, but you mentioned technology, and my company, what it does is it provides technology at a very, very different price from the same technology that's being provided to the large sponsors. Exactly the same kind of data rooms, exactly the same kind of term sheet exchanges, but at a price point that is the cost of a.
I teed them up.
Yeah. I'll take it later.
I'm going to open up the floor for additional questions, but I will say personally, I'm at a crossroads because we're going to be soon at 6 companies. I think we max out at 6 or 7 portfolio companies. So we have to make a decision. Do we grow the staff? Do we partner with other independent sponsors? I do not want to raise a fund because I don't like the proctology exam element of it. So it's really going to be what's the evolution of this model. And for us, what we're thinking about is a more permanent capital structure, maybe a holding company where we don't flip in and out of assets as much. It's just kind of building a permanent capital base and creating value, right? So there are other sponsors thinking about such things, right? I have other people that are in our community thinking about such things. Other independent sponsors that have done well, that have had exits, or think about becoming their own family offices now. So this model will evolve. I think you will see more independent sponsors. You're going to see more partnering, but you're going to see people starting to think about these things because what's the next evolution of this model? With that, I'm going to open this up for any other questions that we did not answer. If anything that you're curious about, anything that we did not address, we should have addressed in this panel, please. We have a few minutes here. It's our best deal, so I'm happy to tell you the story. We bought a company called Flex. It was a power tool business based in Steinheim, Germany. We bought it from Black & Decker. We had an operating partner that was a former president of Pentair Tools, $1 billion division of Pentair. They sold to Black & Decker. Flex was a part of that division. Black & Decker decided it was not core to DeWalt and all the other brands that they had, so they decided to divest it. We were very fortunate because we were one of the few financial firms called on this because of our operating partner. And we closed the deal in 50 days, even with 50, 60 days, even with all the German GAAP issues. I had to go to a hedge fund to get that deal done because we needed to do the deal fast. So they did the entire capital structure. Everything aligned, all the stars aligned. We did all the things we need to do. The currency exchange went in our favor and we sold it. And that was our best deal. So that was about 8 times our money in a pretty short period of time. That was our best deal.
Jack, I think you had a question.
Yeah, I'm just curious. I mean, everybody's had. What are you guys doing to prepare for what's coming next? Assuming.
What do you guys want to take that?
Discipline and valuation and capital structure, especially with anything that's got cyclical exposure. We lived through the Great Recession and managed the portfolio through that and have the scars to show for it and the lessons learned from it. And it's, if good businesses should survive, but you have to have a capital structure that allows them to survive and come out stronger on the other side. And so we're always looking at going into deals and maintaining capital structures throughout our ownership period that can survive a downturn.
Can't echo the discipline enough. If you're disciplined in the good times, you don't get out over your skis. It makes the rougher times a little bit easier. And also understanding, particularly if you're lower middle market focused, lower middle market companies, it's the rare occasion they don't stub their toe. It's just a fact of life. You need to be prepared for that, and you need to be prepared to support that. Because if you don't get that company over the obstacle, you don't get over the obstacle. So you just have to go into it with your eyes open and knowing that's what you're going to have to deal with.
One other thing that's part of the evolution of the independent sponsor model is that it's no longer just equity and mezzanine that's providing capital. We have seen an evolution in trends towards senior lenders lending towards independent sponsor models. It used to be the case that they would only lend if there was an existing independent sponsor mezzanine provider or equity provider that they knew, but now they're targeting this industry by themselves. And that helps with the capital structure, right? Because it's a cheaper cost of capital. And at a time of increasing interest rates, you want to try and get some of that. And I may not like to hear that much, but there are some other capital structure opportunities that you can think of in your companies that you're looking at now that could reduce overall cost of capital.
Yeah,
But
but
from a
in-
borrower's, sorry. just gonna say
In
from-
rising interest rates and potential downturn, go with mezzanine.
I would echo that. The lower cost of capital from senior lenders is a positive, but from a borrower's perspective, senior capital is the highest risk capital. It's the highest risk capital from a borrower's perspective. They're the most likely to pull the plug on you or get difficult. Mezzanine lenders tend to be much more patient, especially if they're also an equity co-investor in the deal. And so we tend to under-lever deals overall and definitely use less senior than the market will allow, pay a little bit higher cost of capital, but it helps you sleep better.
Yeah, and I always say like you really want to be growing the business. If independent sponsor, I would focus a lot more on amortization than you do on interest rate, because your amortization has a very high cost in the sense that that's money that's not being invested in the company. That's flexibility, that's options, that's acquisition capital. If you have an opportunity to grow a business at 8 or 10%, that highly exceeds the enterprise value growth of amortizing debt down. Amortizing debt, that'll get paid down when you sell the company, right? It gets paid off eventually. But if you just sit there and say, hey, I'm going to get the lowest cost of capital, I'm going to pay off the debt in 5 years, you got a 16% IRR. Great job. But if you want to get like 30, 40% IRRs, you really got to focus on keeping the cash in the business, grow it. So I always try to say, don't focus so much on cost of capital, focus on amortization. That's really where your fixed charges are. And then just grow the company 2, 3, 4 years, just have maximum options for downturns, for interest rates and things like that.
I think we're getting the ripcord here. So
Yeah.
thank you, panelists.